Alright guys, so let's get to the weekly daily plotting. Firstly, this video is going to be on GBP, AUD and gold. They are definitely pairs slash instruments slash metals, a metal in which I actually trade all of the time. They're my favorite pairs and I do recommend them for you also. Personal preference. GA, if you look at this weekly time frame right now, it looks a little bit of a mess, but we're going to break it down into a more, easily readable fashion, so to speak. And then we have gold over here as well on the weekly, which is absolutely storming right now. I'm going to go through certain principles, if you will, and simple practices to apply onto the chart technical wise, and also just go through a few other things in regards to reading momentum and what to look out for. Firstly, psychological levels. Psychological levels 8400, 8450, 8500. Key points, key areas where market can reverse from, to, and also take profit at. I program myself to always look at, okay, if I'm about to place a level anywhere, I see if it's near one of the psychological levels perhaps. I may even just snap it to one of the psychological levels. Similarly speaking, it's an action in which I presented in Astro version 1, which some of you former students obviously know. So now what we're going to do, we're going to clean things up. It's the whole process of refinement. So if you guys, you can copy me with this. I do recommend doing so, and I'm just going to keep it very, very clear, very, very simple as to where and which areas I'm working on with GA in this case, because that is very, very messy, very, very choppy price action. Recently we did fall off a cliff right here down into the abyss. Consolidation, consolidation, chop, 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 chop. My first and foremost rule or thought when it does come down to weekly time frames is I'm only using some of the most recent major weekly levels for profit taking, and knowing, okay, in the case of this chart right here, we can see that many of these areas, there's a lot of price to be played with, especially on the smaller time frame. So if you look at this here, we had the boost last week. So going into daily, going into 4 hour, going into hourly, there's a lot of money to be made. Okay, but it's all about just breaking down the region or range we are in, or the next level the weekly time frame can actually run into. Alright, so firstly, what I like to do on the weekly is use the horizontal line. Simply put, it's the only time frame where I use the horizontal line. Monthly, yeah, great. I will keep an eye on the monthly in terms of PA, and I'll always look at the previous month's candle. So if I just show you one thing, GA, we ran into, well, first and foremost, see 1.8800. Okay, we have the spike into it once, spike into it twice, nice round psychological number, and then the market declined. Where did it go into next? We look at 1.7600. Boom here, and then we started to advance back to the upside. Just remove that for 1 second. Here, this is a bullish engulfing formation. Candlestick formations on the weekly and the monthly are not very reliable. It's a hit and miss, to tell you the truth. But what is good is actually trying to read and measure momentum. And how we do that is we can actually look at the previous wick of the candle, whether it be upside or downside. So what's actually happened here is, boom, money's come in, money's come out around these areas, money's come back in. So we've gone from A to B, now we're going from A, preferably back up to B, all the way up here. But what I'm looking for on this month is, current month is the 23rd of September. 23rd of September, we do have just over a week left of the month. So we haven't closed yet. We can actually close lower. At the moment, you can see the body of the current candle is actually more or less above the previous wick. So we left a wick to the downside, wick to the upside. So what I like to look for in the monthly and the weekly, I'll jump into the week in a moment and I'll see if I can express this as a duplicate, maybe for the current week, is the body taking out the previous wick. I would say 80 to 90% of the previous wick, because this is where I lost momentum. The market doesn't really know, it hasn't made up its decision as to which direction it wants to go yet. See, we come all the way back into the lows, then boom, the momentum continues to the upside. So let's say the market closed like that on the month, and we've actually took out the candles, the previous candle's wick, sorry, by 105, 110%. That would give me an insight into, okay, the next month we're probably going to continue to the upside. We're probably going to continue to the upside, and then so on and so forth. So it's like a directional bias. Alternatively, again, it's very, very difficult on the month. Again, this is, I wouldn't say it's hit and miss, but it does favor more than actually using just blunt candles to try to guess a direction in the monthly time frame. You'll see as I go through the rest of the material, the exact time frames that we work with, and it solidifies directional bias. We're looking at intra-week cycles and intra-day cycles. Excuse me. So none of this is really too relevant. It just gives us an insight into, okay, if we see a clear bullish scenario, bullish move, which we may do in the case of the end of September here, okay, cool, the bias for the next month, we can maybe move up a good couple hundred pips, if not 500,000 in the case of GA. Then I'll come into the weekly. So this is where I actually start plotting the line. So again, looking at the previous week's price action and structure, if I put my crosshair at 7.7, there's that region market comes into from A down into B. We have that 3-pin formation here as well, 1, 2, and 3. We have the bearish candle that's ripped back down. This is more or less like an evening star as well, this formation right here. Due to what I've just explained on the monthly, can you see the wick of this candle? See as the momentum takes it out, probably by like more than 100%. It's doubled more or less that wick. So momentum's been dragged down on the week. And as you can see there, boom, 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 market kind of slowed down. The momentum did, more or less. Money is coming out of the market now from A into B. But right here at 7.7, that's where the base is formed, because you can see 1 wick, 2 wick, 3 wick, and then slightly 4. 1, 2, 3, and then 4. Market's then reversed. This, that, this, that. So currently we can see wick high as we spike into 7.9 right there. Look at what happened. Boom, it's right at the body of that candle, through 7.9, through 7.9, through 7.9. Then that weekly candlestick, we actually closed and we topped out probably double the previous wick. This week, last week, spike into 8.1 right there. Spikes into 8.1, and then GA, it's a bit tricky at the minute, to be honest, on this time frame. I am looking for today's price action in particular is a little bit all over the place. So it's going to be interesting to see exactly what this currency pair does going forward. But at the moment on the week, what I'm going to do is just break down various areas and zones in which we can use to decipher profit taking overall. So horizontal tool, simply put. Now here, this is a big ass gap, and the market was dragged back down. I actually remember this. I was in Los Angeles. I actually was doing a class, and the market opened on that short GA, and price just died, 1,000 pips or so. But spring, summer, right there. So ignore that high. It's a breach. We do have that zone. We can take it from the wick high on the week, and then come back in, and we can see wick lows there as well. That is a far cry for GA to actually come and roll into that level anytime soon, I believe. But what I will be looking at is last week's high. I will keep these on. I have like a maximum rule of 4 weekly levels to place on the chart. I don't want it too cluttered. But I know, okay, cool. Down here we have a key area, a key high, key low. We are ranging if you look at the overall spectrum of the currency pair at the moment. But going into the day, you can see that pullback can be imminent. Anyway, I don't need to go too far back because we can get very confused with what's going on. So if I'm just focused on the last, I don't know, few months in this case, I know where the high is, I know where the low is. Every chart is going to be a little bit different, and your levels may be slightly different as well. It just comes with practice. Now, what I can see is huge low was formed, 8,100. So what I'm doing whilst I'm looking at these areas and these levels, I'm actually keeping a close eye on the psychological level if it does meet one next to it. So we have 64 and 61, so that's 8,850, 7,550, 8,100. If you add the psychological level to your arsenal of tools, just because it's that number, what happens at psychological levels, a lot of profit taking happens and a lot of orders come in. So using that just as a piece of guidance, again, it can maybe boost your win rate from 75% maybe to 80%, and also give you that confidence to actually take trades, extra confluence in the tick box to go and do so in and out. So this area for me is pretty good. I'm pretty satisfied with that being 240 pips away from current price. To the upside, what I'll probably focus on, to be honest, is last week's high, which is right there, just shy of 8,500. So again, that's coming in more or less near to psychological level. So I know I've got solid structure. These ranges kind of look pretty straightforward and equal, if you will. But what I'm focused on now is, okay, if this area breaks, we're probably going to run up and breach 8.8 into 8.9. If it doesn't break and that area holds, market can maybe pull back for the week or two into 8.1. 8.1 breaks, maybe can fold into the lower levels. I'll take every step as it comes. So that's all I would more or less do on the weekly time frame. Then I would just zoom in, and then again I would see where momentum lies. So last week we had this wick high over here. We pierced that, penetrated that. So GA could just maybe be pulling back for a retracement and then getting ready to spring to the upside. If you look at the monthly, again, the monthly is looking pretty strong so far. But because we're coming into a new quarter, guys, put the 3-month chart up. Quarterly chart. Let's look at the quarter. So the quarter just gone, we dipped into lower territory, 7.8, 7.5, and look at all of these wicks. 1, 2, 3, 4, 5. I'm not even focused on the candle colors, as you can see, but we do have a lot of wicks and spikiness to the upside. Failed momentum on the quarter chart. So, we can clearly see the bodies of 4 candles there. Look at this spinning top in the middle. I can put my crosshair there, and that can be a supportive region. The high of this body into the low of this one going across, you can see that 1.8036, 1.8037 is a key area in which, if the bodies lie and stay above that, if this body closes on this quarterly chart, it's 3-month, it is a bullish engulfing. It's engulfed the previous. So again, we have to be quite diverse in what we're looking at on the chart, and also mix in so many different factors that we've learned previously, even from like the basic retail stuff. It all does serve purpose. It's just about how your mind perceives the chart and if you can actually remember it and recognize it. Anyway, what we do need to take out is more or less these wicks. And if I look at the crosshair here, where this body is, because this is the highest body, 8.3 something. If we do breach that as well, we'll engulf this candle and engulf this one. So again, for the quarter, for the last quarter of the year, can pound actually regain some strength? Who knows? So again, I would always look at the quarter going into a new quarter, simply put. Now, GA is messing around on this lower time frame, but we'll see what happens here. All right, so that's my weekly. If I just display that on the daily time frame, if I just display that on the daily, that's what it's looking like. What you can also do is you can go into the, I do recommend this actually, sometimes I slack myself, go into the toolbar, go into the settings. Come on. I don't know why it does this. Sometimes it just doesn't work. Maybe I have to refresh the page. But you can go into settings and you can put a label here like weekly, like you did in the primary Astro content. What I can also see here on the daily though is 1 drive, 2 drive, and 3 drives into the highs. And at the moment, on this daily time frame, what I'm going to do, I'm going to go into gold first and then revert back to GA. So I'll do weekly GA, weekly gold, daily GA, daily gold. Daily so far, we'd have the pull down, and can you see the wick here? The market, this is a shooting star candle as well. The market is actually below that, so we can maybe pull back. 10 p.m. closure, we are maybe looking to, boom, come back to the downside. 1 drive, 2 drive, 3 drive. I'll explain all of these patterns afterwards. But yeah, those levels for me, if GA does start to pull back, you know you have that weekly slot right there. If you look at the weekly PA, the daily PA right in front of us now, we drive into it, rebound from it, drive through it, spike, spike. So look at the accuracy right here. Look at the accuracy. So accuracy, accuracy. So this is the prime target for GA to the downside. If we are going to hold a short position, and there's going to be so many different opportunities to do so. I find so many different opportunities to place trades. You guys just bear with me. Alright, so I'm happy with that. Before I do go into daily structure and just throw in a few things on the daily chart, let's go into gold. So going into gold, let's go into right, so quarterly. Look at this bad boy on the quarterly. Now, looking at this range, just as a quarterly piece of analysis, that range has been smashed out. You could extend it there, you could extend it there, whatever it may be. There's various depths to this range, so to speak, but boom, breakout, continuation. Gold's looking to take out new highs. Look at that. More or less 2K on gold soon. So bullish structure, bullish territory. After this pullback, we're in there for what, 1 or 2 years? So with that in mind, we can then go into the monthly. Looking at the month, we've had some strong pushes to the upside on the monthly time frame, which is pretty good when it comes down to the bullish bias and sticking with that overall ultimately. Sorry, 1 second. Let's fix this mic. Yeah, so in the case of the month, we are looking strong. Some monthly charts, will look a lot clearer than others, and that's just going to be the nature of the price action and the nature of the currency pair. Here gold is looking way clearer than the GBP AUD, right? So we can see that we're probably going to come up to test those highs there. So it gives us a bias in mind, gives us an idea as to where the currency or metal in this case can actually run to and run into, so we can maybe even make notes of that as well, do annotations on the chart. Right, so let's get to the week. Now, the weekly time frame on gold, what I'm going to be looking at here is if we use the same foundational aspects as we did with GA, we can see here that, boom, there's a lot. I caught this entire move. This was in August. I was going on Twitter. I was going hard with some trades on social media. It's like my last stretch of sharing stuff on social media. I'm taking a step back. But I kind of went nutty with it. And I got some real fucking good trades from gold. So this move here, this entirety of the move, which actually caught right into 1500s, let me just show you how I did it. Firstly, I don't have the levels on that I did, but I had a level here, okay, 1381. I had a higher level, I think it was this one or one from prior. I can't remember exactly, but more or less gold was in a range. So if we just imagine that this PA doesn't exist, bang, 1, 2, okay, gold was more or less ranging in between. Key numbers to be aware of, 1400 right there, okay, you can see that it's not, the bodies of the candles, they aren't bang on 1400, we have spikes through the level. Now, upside, we have bull candle coming into the zone, shooting star. Shooting star, again, could be quite a, what's the word for it? I can't think of the word, it'll come to me in a moment, but it could trick you more or less into thinking, oh shit, gold short for the next week, and then look at that, boom, mess. So what I'm focused on is the wicks, the new range that's been broken through. So I've got 1 and 2, we have the bullish engulfing right here, takes out the 2 previous bodies, and then the momentum is slowly itching to the upside. 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. But then what happens? So what we want to do for large moves in the market, again, with gold, I held it was only a week. It only took 1 week to blast through and provide X amount of pips. Once the market has made up its decision, when it's the momentum and the orders have been collected, the momentum is where we want to ride. We're not going to be right 100% of the time, but this thesis also applies to the lower time frames as well. But I'm just going into giving you guys an overall long-term edge and trying to assist you with getting the overall direction in which to trade. Sorry. You'll see how the daily and the weekly form a decent unison, very good unison. They work very well in alignment with each other. So that's why I've broken the videos up into weekly and daily. on GA and gold, and the next weekly and daily is going to be on GBP, USD, and USD CAD. So once we get that digested and you've taken your notes and you understand, okay, the simplicity of what we're looking at, then we're going to go into the more advanced stuff. But this is first and foremost. You have to complete this step. All right, anyway, over here, what we can clearly see, which we didn't really see anywhere else, is we had this wick that was all over the place. The body kind of filled it, but the closure of the entirety of the candle was weak. It was wet. Can you see that? It just spiked through the previous resistance, and it was still in range. Then we had the bearish candle. Okay, so green, red, boom, back to the upside, and then here is the bad boy, in which if you put the crosshair at where these bodies are across, so this was structure. So structure was made where the bodies are. The body was broken by this candlestick right here. Can you see that? And then the price actually floated above it. 1, 2, 3 candles remained above where these bodies were. So as I go along, you're going to actually see, okay, cool, where the wicks are. The wicks are more or less a representation of order flow, if you will. The bodies of the candles, we can just trail the crosshair across and we can see where the actual structure of the bodies is being. So there we break up structure, we hold structure, spike, spike, spike. But you can see where this is spiked all the way back into more or less that little mini resistance level, tested it as support. Then this candle has gained the momentum and cleared out the previous wick. And then, boom, for the week ahead, I was like, gold is going to go fucking long. Buy. Simple as that. So 1414 to 1500s. Can you see how, look at this, 1500 is such a massive level on gold. And again, psychological level, you can see where money's gone from A to B and left the spike behind into 1500. Then we flailed around for a little bit, doesn't really know where it wants to go next. You know, fundamentals and stuff are happening. There's certain things that are going on in the Middle East. You've got Trump and his tweets and all that kind of stuff. A lot of it's bullshit, to be honest, but you can read it first and foremost in price if you are proficient in doing so. So 1500, bang, then you have dead momentum. This momentum, I actually did think that we were going to go higher, straight to 1600, but as you can see, ding, 1, 2, right at 1550. Let me just put a line at 1550 there, just to show you. Key area, massive psychological level. So money's come out, pull back. So what's going to happen now on gold? It's either going to create one little leg and then boom, roll over. I do believe it is due for a relief. I do believe so, or it can just blow straight through the fucking ceiling and go straight to 1600. And then again, look at the quarterly. Think how the quarter needs to end. Think about, and then again, all of that kind of stuff, especially quarter on quarter, is more fundamentally driven. All of the other material Craig stuff, with all of the fundamentals there, you can actually go into that, learn from that, and then apply that to the charts as well. I'm not such a big guy on fundamentals, I never have been, it's just my nature. But I do know that certain fundamentals will drive a currency pair, or a metal in this case, to a specific level in 3 months or 6 months or even a year. So just think, guys, that you know, there's going to be certain fundamental announcements that could fall in line with that 3-month, monthly, weekly price action to actually push this into a certain zone before Christmas. Okay, so anyway, you know what I'm going to do? I'm actually going to leave those two on there because I know they're solid levels, solid zones. What's GA saying? Waiting for a potential setup on this. Waiting for a potential setup. I'm going to leave those on there, and then what I'm going to do, I'm going to stretch this, and you know what I'm going to do here, because I know it's 1550. Instead of putting it straight at the wick, I know 1550 because I've got experience with gold. I'm going to leave it there. I'm going to leave 1550 as a weekly level. What I am going to do though is zoom out to see, okay, if 1550 is fucking broken, where's the market going to go next? Now, looking at the huge valleys and peaks, and in this case where it's sliding off an absolute cliff, boom, we have this massive down move. The region before that, okay, if I just get the entire picture in, so we've got 1550, where can we go above? What I'm now looking at is, see these wicks, 1, 2, 3, 4, and looking at the round number that's near them. We have 1600, however, that doesn't really fall in line with the 4 wicks that I can see there. So what I'm going to go ahead and do is I'm going to get the tool, and I'm going to find the average of those 4 wicks, which is more or less 16, let's just say 1620. 1620, 1625, 1630, etc. as an example is a psychological level. So I know 1620 is a decent call. So I know overall on the weekly time frame, if we blow through 1550, guys, we're going to go to 1620. And my rule is to have 4 levels maximum on the weekly. All right? 4 levels maximum. I don't want to go any more because it gets messy and it gets stupid. What I could also maybe look out for, though, is I can maybe translate, if I can transform one of these levels here. I'm really interested in 1480 and 1483. You know, I'm going to actually do it. I'm going to bring this one up because it's not relevant at the moment because the price is too far away. There. Because this range on gold is something in which, boom, we can actually come back around and retest this low. If gold really wants to fuck around like that and pull back. So at the moment, our prime focus and our areas of focus have shifted. We've gone from one range, boom, blow into the next range. So what we could maybe see is another candle like this, maybe even this week, maybe the next week. But we're then prepared for, okay, cool, next zone. The weekly time frame is the only time frame. I've explained the 3 month, I've explained the monthly. We don't do any analysis on that, just looking at the candles and momentum. Looking at the weekly, that's when we can, you know, go back a little bit and then find peaks, troughs, valleys, whatever you want to call it, where the price has died or the price has rallied. Looking at the wicks, line it up with psychological levels to see if we can then merge into the next target. So we have the next target here. But, however, we need to break that zone. We need to take out these wicks first and foremost with some momentum. Then we're on our way to 1620. From here, it's 1,000 pips. So, 27 minutes into the video. I was only expecting this to be 30 minutes long, but we haven't finished yet. What I'm going to do, I'm going to cut this video and then I'm going to go into the daily. I'm going to just split it up so you guys can go back and watch and, you know, just pick up a few pointers, take some notes, whatever it may be. But I hope that made sense so far. Before I do go into the other video, let's just, again, recap. We have the daily with our weekly levels on. Please label them if you will. I just keep mine black. And it's the only time frame we're going to be using horizontals. I've set this layout out in a way in which we're using certain tools on certain time frames, so our mind is programmed to know exactly what we're looking at when we scale down lower or go higher. Right, daily there, looking at the daily on gold at the moment, what we can actually see is nice. This is a really, really nice range. We have 1 drive, 2 drive, 3 drives. Look at the 3rd drive high. I actually caught this move when I was in Miami 2 weeks ago. And then we have 1 drive, 2 drive, 3 drive. We haven't really had a relief off that. So the relief is here. We've bottomed out at previous. This is where we've actually taken the support from. Newly found support. And then if I just put the crosshair where these bodies are, just these two, boom, you can see where this candle is broken out of that region. Again, I can see all of this by eye now. I can just literally trade with the crosshair. And, you know, I was explaining this at one of the classes and I was getting ridiculed for it. But people's brains are so far behind when it comes down to psychology. And it's like, he trades with a crosshair. What the fuck is this shit? It's like, no, all of the levels are actually ingrained in my head because I know these pairs like the back of my hand. So it's quite an intelligent thing. It's not retarded. Anyway, we break through, we take out 1, 2, 3, 4, 5 spikes here, and then look, we're kind of in no man's land, doesn't really know what to do. Just fling on a fucking Fibonacci from boom, boom. I'm nearly at 61.8, so we could just rebound. We'll get to that good stuff later. Alright guys, so I hope that made sense. Weeklies, momentum, 3-month quarterlies, merging quarterlies with fundamental targets, being aware as to where the price can be pumped to for that end of year target, end of quarter target, so on and so forth. And then now I'm going to cut this video going into the daily, breaking down these 2 pairs. Then we're going to do the same on 2 more. So you're going to have 1, 2, 3, a good 4 videos as a startup digest before we get into the real good stuff. Thank you.